Hey, what's up, stock compounders? Brad here. So today we're talking about what stocks smart value investors are buying this week. I do this every week. I think it's, the sixth episode, okay? So this is where we look at, in Corner of Berkshire and Fairfax, what are investors in there saying that they've bought within the last week between April 15th and April 9th. So this is actually the lowest activity week I believe we've had since starting this series. There's 6 companies that have been bought, publicly disclosed as having been bought in the last week on Corner of Berkshire and Fairfax. Here they are: Atlas Corporation, Zillow, Ferguson Plc, Alibaba, Boston Omaha Corporation, and Preferred Apartment Communities. Okay, so what I do every week in this series is we're going to look at these companies through a number of filters. Okay, the first filter is market cap. How large is the company? Just number of shares outstanding times share price today gives us the market capitalization of the business. We're going to look at insider ownership. Okay, and this is really based on what Charlie Munger says: show me the incentive and I'll show you the outcome. We want we want the management team to be aligned with us, the stockholders, the shareholders. So a higher insider ownership just sets us up for a better alignment with management. So guys, I'm just going to reset this here. My little Apple feed here sometimes freezes on me. So that's this column, insider ownership. We've got some good numbers this week. We got 4 out of the 6 that are over 10% for insider ownership. I really like to see that. The next column is the bowling with bumpers column. Okay. If you have a choice between bowling with bumpers and bowling without bumpers, you should always bowl with bumpers. And in this sense, what that's saying is, if we're looking at stocks that other great investors have already bought into, they already have voted with their dollars for those companies, we're going to do a lot better than if we go out on our own and find businesses that other super investors don't already own. Okay, so pre-vetted companies, this is how many gurus have vetted each of these companies. So you get a point if you've been vetted by a guru. Okay, that's where this score column comes in. A point if you're over 10% insider ownership, if you have at least one super investor invested, and these investors are tracked by Dataroma, which is a service that I like to look at for super investor activity. And then the last column here, in terms of the scoring, is Value Investors Club, VIC, started by Joel Greenblatt more than a decade ago. This is where investors submit ideas for different businesses, and they provide a write-up for that business, why they think that business will do well as an investment. And we can see here the most recent write-ups, the month and the year that the most recent write-up was done in Value Investors Club. Some of these are very fresh. Atlas Corp and Ferguson Plc, just 3 months ago, okay, a write-up in VIC. So that gives us the score, okay, insider owner, guru, and VIC. There are 2 that have a score of 3, which is awesome. I love scores of 3. We've got 2 that have 2 points, which is pretty solid as well. And then the 2 at the bottom here are the laggards, I would say. And then the final 2 kind of metric columns here, we have the acquirer's multiple. And what that is, it gives us a sense for how cheap the business is based on the last year of earnings, okay, earnings before interest and taxes. And the formula is enterprise value divided by EBIT. That's what this number represents. So again, the lower this acquirer's multiple, the cheaper the business based on the last year of earnings. And this column here, 10-year revenue growth, is, what have revenues done over the last 10 years? This is the annualized growth rate of revenue. So, are we looking at a discounted business here? Are we looking at a growing pie of a business? That's what these numbers give us a sense of. And then in the last column here, I just kind of give a brief summary of, what I saw in the Value Investors Club write-up, or if there was a thread on Corner of Berkshire and Fairfax for this specific business. I gave a little pitch about what smart investors in there are saying about the company. So let's just go through each of these. So Atlas Corporation, what is it? Independent charter owner and manager of container ships. Okay, market cap around $3.5 billion. So half of Prem Watsa's Fairfax Financial Holdings is in ATCO. Okay, very large position. We can see that here if we type ATCO in Data Roma. Prem Watsa, Fairfax Financial, it's almost half of the portfolio. If we can click through and see, over $1 billion are what those shares were worth at the end of the year last year. So very large position from Prem Watsa, also known as the Warren Buffett of Canada. And, very impressive insider ownership number, 26%. Two gurus own it, like I said, Prem Watsa being one of them. Very recent write-up. Acquires multiple of 15. Now, that's the lowest on this list. Not crazy cheap still. I'd say it's a fair price in general for a public company would be an acquirer's multiple somewhere around 15. A company that's not going to, grow very much over time. 15 is typically a pretty fair price to pay for a business like this. Now, 13% 10-year revenue growth, that's probably a little bit better than what I would expect for an acquirer's multiple of 15. So it could be some opportunity there. Now, the write-up was done in January. The price was a bit lower. For ATCO then, I think it's up something like 25% since then. But the kind of soundbite in this VIC write-up, you've got a brilliant capital allocator at the helm with ATCO. You've got long-term oriented shareholders, kind of the big shareholders in ATCO have a long-term orientation, and a 3.6% dividend yield, which, if that's, if you understand this business and you look at that dividend yield, then it seems like pretty safe to expect that those dividends are going to continue. It's pretty strong if you look at your alternatives in terms of, what you're going to get on treasury yields or anything like that. So that's the first one. Second one, Zillow. Now, Zillow is a darling of, the internet in terms of the real estate industry. You get digital real estate company based out of Seattle, Washington. Pretty sizable market cap, $33 billion. And I'd say it's not really even profitable yet. Okay, it did turn a little bit of a profit in the last year, but it's very small as compared to the enterprise value, which is why the acquirer's multiple didn't even really make sense to put here. It was just so high. And it's in startup mode, right? It's very early on in the life of Zillow, assuming it's going to be a successful business. 20% insider ownership, quite compelling there. Two gurus own it. This is a little bit dated, I would say, of a Value Investors Club write-up. Now, normally, for a business that was more mature, I would say this is probably a still very relevant write-up. But for a company that's in the early stages, like Zillow, a company that's where things are changing quickly, this is probably pretty outdated a year and a half ago. We do have a score of 3. Again, no acquires multiple, 60% revenue growth annually over the last 10 years. So, it's aggressively growing. Like I said, I'd say it's not profitable yet. It hasn't really hit that point yet. But it could be an interesting one to dive into. For my taste, it's still a little early in the game for me to have any kind of conviction out the next 10 years about what Zillow is going to do. So I'm going to pass on Zillow. Next one, Ferguson Plc, distributor of plumbing and heating products based in the UK. Now, it's based in the UK, but the vast majority of revenues generated by Ferguson are coming from the US. I think it's like 95% of revenues are generated in the US. $28 billion market cap, basically negligible insider ownership, which I really don't like to see that. There is one guru that owns it. Very fresh write-up, like I said. So we got a score of 2. Acquires multiple 19. That's a little higher than I like to pay, especially when you look at the 5% annual revenue growth over the last 10 years. That is not a combination that gives me a lot of confidence in this investment opportunity. But of course, the devil is in the details when it comes to investing, oftentimes. So in this write-up, the kind of pitch at the beginning, well-managed, diversified distributor and roll-up operator with a long runway to productively reinvest capital. Now, those words really hit me in the sweet spot. Productively reinvest capital. That's really this compound growth engine when a company can reinvest earnings at reasonably high rates of return for a long time. You start to get that snowball effect. So, this isn't really an industry that I have any particular knowledge in. It's not in my circle of competence. So I'm not going to look deeper into this one. But maybe it's interesting for you. Next one, Alibaba, needs no introduction. I think Alibaba has been in this series, at least 5 of the last 6 episodes, okay? Lots of interest in Alibaba in Corner of Berkshire and Fairfax. And of course, Charlie Munger, the news that the Daily Journal bought in the first quarter of 2021. Now the low price in 2021 in that first quarter was $223, okay? So, what was it, 43 million or something? 37, 34, I don't remember. Tens of millions of dollars from Daily Journal were put into Alibaba at no less than 223. So I was pretty happy with my buy price of $227 per share. I probably got a better price than Charlie Munger. And seeing that Munger bought in was really what tipped my buy decision. I'd really been at the edge in terms of whether to buy Alibaba or not for at least 6 months before I pulled the trigger. Obviously, the big e-commerce player in China. And Lilu, mentioned what's happening in China in terms of the rise of the consumer class in China. And he thinks there's just going to be huge tailwinds for retail over the coming decades in China, which, is a pretty compelling story for Alibaba and other players in the e-commerce space. JD.com, Pinduoduo. There's a number of players, but that'll be interesting to watch. Pretty impressive insider ownership for a company this large, $633 odd billion market cap. No stranger to the gurus. We got 10 of them in Alibaba. What else? Acquires multiple seems high. If you compare it to something like Amazon, it's about half of what Amazon is, around 70. So obviously, you can't directly compare Amazon to Alibaba. They're in some of the same industries, but they're operating in very different economies, cultures. So it's probably not fair to compare them directly. But 36 acquires multiple. Honestly, it seems pretty reasonable for a company like Alibaba, especially when you look at the growth rate. I think this is over 8 years, this growth rate. It's not a full 10-year because I only had 8 years of data, but 50%. You guys, that is phenomenal. Incredible growth rate for Alibaba. So that's number 4 on the list. Number 5, I've never heard of Boston Omaha Corporation. Okay, this is an outdoor billboard advertising company in the southeast U.S., but it's not just a billboard advertising company. Okay, and we're going to see that in this particular write-up in a moment. Quite small, under $1 billion market cap, $768 million, which I really like to see. Super strong insider ownership. More than half of the shares outstanding are owned by insiders. No gurus, which kind of sad face there. The last VIC write-up was a short thesis, okay, just 2.5 years ago. So, that's something. And it's around the same price, I believe, as it was back in October of 2018. Now, granted, much of the story may have changed in that 2.5 years. So I would say this is likely outdated. 2.5 years is a long time. And then there wasn't any acquirers multiple number because I believe this company lost money in the last year. And I think it's maybe only been public for 5 years or so. So it didn't quite seem right to give 10-year revenue growth numbers. But I just wanted to pop open this investment thesis, which I found through Corner of Berkshire in Fairfax. Just give the quick pitch. It's a unique holding company with strong silo-esque businesses in niche industries. So here are the industries that BOMN are involved in. Out-of-home billboard advertising. Okay, so that's kind of what we talked about in the description. Surety insurance, and fiber to the home broadband. Now that's pretty interesting to me. Fiber to the home broadband. It talks a little bit more. So it's incorporated in 2015. There you go. So it's only been public for about 5 years. So this is a pretty solid kind of overall, story situation for this company. So check that out if you're interested. Boston Omaha Corporation. And then again, in this thesis, they're thinking, and this was written in January, this investment write-up, January of 2021. They're thinking there's about a 46% upside from the price today on this company, for what that's worth. And then lastly, Preferred Apartment Communities. This is a company that's shown up a number of times in these weekly episodes. Ownership and operation of Class A multifamily in the southeast United States. Less than $500 million market cap, which I get pretty excited to see that. But you guys, I wish this company checked some of these boxes. Very weak on the insider ownership, no gurus, no VIC write-up. However, the guy who really pitched this company, or I should say who initially said that he was buying it, created a thread in Corner of Berkshire and Fairfax for APTS, okay? Not very long ago, maybe in March, I think it was. So, a lot of that is very fresh. He thought, if you're looking at these properties that they own as Class C, using that kind of cap rate, the company's probably worth somewhere around $10 per share. And that's what it's trading at now, around $10 per share. If you're giving them a cap rate that would be more appropriate for Class A multifamily properties, the company could be worth somewhere around $43 per share. And he thinks these properties are the definition of Class A multifamily properties. So, let's say we're somewhere in the middle, between 10 and 43, somewhere around $25, $27 per share, something like that. There's a lot of upside if that's the situation, from $10 to $25. That's a very large discount, a 60% discount to his conservative estimate of intrinsic value. So, and you can see here the revenue growth over the last 10 years has been very impressive. So check out this thread on COBF if you're interested in this one. Honestly, guys, I think I am going to dig into preferred apartment communities. The market cap is right where I want it. Very small company. And it's had a pretty impressive track record. It is using a lot of debt. So I've got to better understand what the risk is in the type of debt being used in this business. But there could be something here. Preferred apartment communities. So that's what I've got, guys. 6 companies that smart value investors have bought in the last week. And like I said, probably the only one that I'm really interested in diving into on this list, I may take a little bit more of a peek at Zillow. But the main one here is preferred apartment communities. This week really gave me the nudge I needed to spend some more time with that one. So that's it, guys. Let me know if you're buying any of these, if you have any of them on your wish list or watch list. And I hope you enjoyed this episode of what smart value investors are buying this week. All right, guys, take care. I will see you in the next episode.